Hi everyone, welcome to the Buffett and Beyond Research Stock of the Week, and we're going over a stock in the retail building supplies because all of a sudden this past week the home builders got very excited, the most they've been in several years over home building, because there's a shortage of homes and there's a greater demand for homes. So that is only good for the retail building supplies. Now, this company is up 50% in the past year and up 250% in the past 5 years. Really doing nicely. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Let's talk about WSO. WSO distributes heating, ventilation, and air conditioning equipment, as well as related parts and supplies in the United States and overseas. Has about 7,275 employees. So when a builder builds a home, they don't put in the heating, ventilation, and air conditioning. They get WSO to do that, folks, because when you're a contractor, you want that house built, you want it built by the best people, so you call in certain contractors to do certain things. WSO is one of those contractors, as shown by their great stock appreciation over the past 5 years. Now, I want to show you something that has to do with this description right here. So let's go here. Now, you can see the net income. Now, the net income is a clean surplus earnings, and we can see the earnings have gone up every year except, 2023. This past year, it fell down, and now it's back up again, continuing its rise up there. Now, what happened? And let's go back and see. WSO should notch decent operating results in 2024. That's this year. Last year marked the introduction of various federal mandates, so here comes the government, requiring higher efficiency HVAC, heating, ventilation, and air conditioning equipment. Well, that's a good thing. Now, the rapid rollout of these systems posed challenges for many manufacturers, causing temporary production delays. And these setbacks should be nearly completely resolved, and now expect an uptick in volume will support sales growth in the full year, and they're talking about 2024. So that's what happened last year. In 2023, we had that little downtick. Okay, let's look at WSO and compare it to the average stock in the past 5 years. WSO are the green vertical lines, and the average stock are the blue. And you can see in the clean surplus return on equity, when you think about return on equity, think about your bank account. How much interest do you get? That's your return on equity. So with WSO, 33.8%, it's 2.5 times that of the average stock. So if you think about it as a bank account, would you rather put your money in a bank account or into a bank that's returning you 33% or one that's returning you 13%? That's how you look at the clean surplus return on equity. Net income, more than 50% than the average stock, and revenue growth more, and these are 5-year averages, more, about 30% more than the average stock. So WSO is firing on all 8 cylinders here, folks. And let's come back to this table once again, and here's the 2023, last year, little blip down because of those mandates put on equipment, and therefore more efficient equipment, and therefore the manufacturers could not get them to the people like WSO who were putting them in the homes. But look at this clean surplus return on equity. You see how it's been rising generally over the years. Now, the clean surplus return on equity for the average stock is about 13%. WSO has a 33.7% clean surplus return on equity projected for 2024. So this stock is way above the average stock. And the only thing that bothers us is the retention rate. In other words, if we see a company that's putting 100% of their money back into the company in order to grow, that's the retention rate would be 100%, then you can see a very quickly growing company. But right now, this stock is not growing so much, but it makes up for it because it's paying out a 2.3% dividend, which is really pretty nice. And here's the net income growth and revenue growth that we talked about in the last slide. So let's look at how this stock has done over the past 1 year. Black line is the S&P 500, and we could see that WSO just coming out with earnings and the housing supply business just starting to boom all of a sudden. We can see this stock is up 45%, while the average stock in the S&P or the S&P is up 30%. So this is a big difference in here, folks. So you can see that if you can outperform the S&P 500, because remember, 96% of professional money managers that run the publicly traded mutual funds cannot outperform this black line. So if you can fill your portfolio with stocks, as we do, with stocks that outperform the S&P 500, you're going to outperform 96% of those professional money managers. And we do it almost year after year, folks. 22 years of actual portfolio implementation, and you can see how well we're doing, outperforming the S&P 500 on a compounded basis almost 3-1. That's amazing, folks. All right, 5 years, yeah, here we are, up about 220%, 215%, while the market is up about 80%. Again, black line's the S&P 500. So you can see this beautiful, steady climb that's been going on. And I wanted to show you 2022, which was a bad year for the market. The market fell 19.6%, and Watsco fell about 15%. So even when things are bad, this stock outperforms the S&P 500. So it's also a defensive stock, where it has been in 2022, and it totally outgrows the S&P 500. That's the kind of stock you want to put in your portfolio. So, folks, we had a really good week this past week, with the market doing wonderful things like going to new highs. And Watsco is one of those stocks that's helping move the market forward. So if you want your portfolio to outperform all those around you, especially the professional money managers out there, you want to invest like we do using the clean surplus method. So, folks, it's the weekend. Go out, clear your head, have a good time, walk on the beach, walk on the golf course, be with your loved ones, have a Sunday dinner. But most of all, be safe, be healthy, and we'll see you back here on Monday.